Hey, this is Dan Fitzpatrick at stockmarketmentor.com and optionmarketmentor.com. You need to check that out. Yelp. Here's a trade idea, or actually kind of an exit idea on Yelp. This has been a real popular stock for obvious reasons. Look at the middle of last year. It had a breakout above 32. Now it's knocking at the door of 100. Let's apply just a basic measured move to this. And this is what I'm really looking at. I'm looking at this stock. Okay, Friday, sell off 3%. That was only one day, and we've seen it before. And so I'm looking at this stock thinking like, okay, how do I plan my exit on this trade? Do I just set a trailing stop, which I can do? But let's look at it a little bit more clearly. This was the last support level down here. This was the last resistance level. So we kind of draw a box here. And I just use basic mental math with round numbers. We had a low of 56. We had the breakout level here at 75. So let's say the stock went $1 lower because I don't like to count on my fingers too much, and it went from down to 55. So 55 low, 75 high. We've got a $25 trading box. Once you get the breakout, what you want to do is, and I applied this to Tesla and got a $172 price target using the same type of thing. You take the width of the box, which is 25 points, and you add it to the $75 breakout level, and what do you get? $100. That's where I would look to see some more selling at $100. As I see this, I would look at it this way. This stock, went up to $99.99. It basically hit that $100 level. Now, you can stay long, and I'm not saying that the stock is going to move lower. What I'm saying is this measured move has been completed. It's done. Typically on measured moves like this, it is a minimum price target. It's not a maximum price target. A lot of people make that they make that mistake. I mean, man, I can just see the tweets now. Stock's up at 110, 120 bucks, and I got some yahoo tweeting at me saying like, "Hey, how'd your short go on Yelp?" Or, you were so stupid or so wrong on Yelp that it was going to stop at 100 bucks. I'm not saying it is. What I'm saying is it's failed here before. It's moving lower now. This is where supply lives. Supply lives at 100 bucks. Sooner or later, supply is going to move out. It's going to move elsewhere, and it may move up to 105 or 110. What I'm suggesting is this. If you're long the stock, just understand that this measured move has occurred. Use Friday's intraday low of 91. And then you got to look and say, okay, well then if I'm gonna set my stop just a little bit below 91, then maybe I need to set it below 90 because that's kind of a logical bounce point. And if I'm going to do that, maybe I need to set it below 89 because that's where the 20-day moving average is, the middle Bollinger Band. And then you're going to look at that and say, well, that's not working either because look what happened here. Stock traded below this 20-period moving average for a couple weeks, about a week and a half, and then it broke out. So what the heck am I going to do? What I would suggest is this, because all of these things are valid. I used to be an attorney. Didn't like it because I had to work with too many attorneys, and you know how that is. But I can argue both sides. What I'm saying is use some risk management here, man. If you're holding this for the long term, stop video now. Because the stock's nice uptrend. It's probably going to continue. But if you're a short-term trader and you've been trading this move or this move out of the volatility squeeze, set a stop on half of your position, a little bit below 91. Then you can deal with the other half based on what the stock is doing. But if you bought the stock at 80, 70, 75, or if you're just kind of wondering how these measured moves work, watch the $100 level because, again, that's the minimum price target, but it is a price target nonetheless. And by the way, if stops get hit and Yelp pulls back to the low 80s, in my mind, that's one that you want to buy. if the stock bounces. And I go into a 3-part analysis in the member video this weekend on how to buy these dips correctly. And there's 3 parts to it. 2 out of 3 ain't bad. But it ain't good either. In fact, it's not good enough. And I don't care what Meatloaf sang about. You got to have all 3. Okay, members, over to the strategy session. We got a lot of stocks to talk about and specific ways to be trading this market. I'll see you there.